Yeah, let's talk about gold returns today. And you might have seen perhaps some message on WhatsApp or some forward somewhere on social media that talks about how gold has been increasing and how gold is a good investment and so on. And if you take our own the gold in INR, and if you take returns from daily data that's well documented for the last 41 years, from 2nd January 1979 to 24th July 2020, gold has moved per troy ounce, that's about 31 grams. The gold price per troy ounce in Indian rupees has moved from 1792, that's big money in 1979, to about 1,42,343 in July 2020. That's a annualized return of about 11.1%. Now that's great, that looks great, but what most people forget about is the fact that most of those returns are driven by the USD INR exchange rate. Because if you look at the gold return is 11 in INR is 11.1%, but if you look at the same period and calculate the gold return in USD, it is 5.25%. So most of it is basically driven by the exchange rate. And from 1979 onwards, two very different things happened. In the USA, in the early 80s, late 70s, they had very high inflation, and then from then on the inflations dropped dramatically, and it kept going down, and it was stable for until now. It has been more or less very stable, and the gold price kept falling in association with this. But in India, the situation became very different. In the 80s, gradually our finances became worse, the finances of our government, and slowly we were becoming bankrupt. Then we were arm twisted by the IMF into opening the economy in exchange for a loan. And then the 90s was also the India was pretty much bankrupt. The rates were very high. It was credit risk. The PPF rates were very high. And then the software services emerged as a major contributor to the GDP and so on. So India has India has emerged in a very different way from the US in these last 4 decades. And if you just look at the gold price, which is just a normal scale, if you just look at it like that, that looks really awesome. Aside from this major crash that happened a few years after the 2008 crash, most of this huge surge here happened because of the 2008 crisis, and then once that kind of settled down, then the gold prices fell and was underwater for quite a while. But if you want to get a more realistic picture, you should plot it in log scale. I have talked about why log scale is important several times, and it helps you pull out past features very well, and it shows it tells you if you are looking at a 10% up movement or a down movement. It compares the past 10% up movements, down movements in the right scale with the with the current movement. So the log scale is the most appropriate measure to plot a long time series such as this. And if you plot it in log scale, you immediately see there were 3 periods where gold was underwater. Underwater means it hit a maximum, and it was below that maximum for an extended period of time. You can see that between 1979 to 89 it was underwater. Then another 6 years straddling the mid 90s to early 2000s, and then 2012 2013, and thereafter there's another for about 5-6 year period. So gold has seen extreme downturns. It's not like it's been moving up all the time. Many people get that wrong impression, and that's very incorrect. And if you plot on a normalized scale, the gold in USD, which is the black line here, the gold in INR, which is the red line, and the exchange rate, which is the blue line right in the middle, and if you plot them starting from a price of 1, you can actually see that the INR USD exchange rate has actually outperformed the gold USD price movement for the last 41 years. It has actually outperformed it, and only for a brief while the gold USD had betted, but then now after 41 years today, the INR movement is higher, the return from the exchange rate is higher than from gold USD, and that tells you why the gold INR has moved up significantly. And just as I mentioned a few minutes earlier, as the inflation in the US fell down and the US became an economic superpower, it cemented its status as an economic superpower. Gold actually fell down from its values in the late 70s, and up to about 2007 2008 it was below its maximum, the price that was there in 1979. So gold had a underwater period for like 25 26 years, which is like a huge time. I mean, nobody even understands that this is even possible. They assume, oh, gold will always increase and so on. No, that's not true. And if you notice, gold INR moved up while gold USD moved down, but after the 2000s, both the movements has been more or less correlated, and you can see this when you plot the rolling returns. If you plot the 5-year rolling returns, there's a huge disparity in the period I just mentioned between the gold INR and gold USD period, but then you can see after that it slowly started falling in step. Of course, there will be a gap, there will always be an alpha because of the exchange rate difference, but that alpha was huge and then it fell down. And if you just before we go to a 15-year data, where we can see the alpha disappear, basically this is what the 8-year rolling returns look like. And people ask, how much return can I get from by buying and holding sovereign gold bonds and so on? The truthful, honest answer is nobody knows. And this is the 15-year rolling return difference. You can see how much the huge difference because of how when the exchange, see what happened was in the early 90s, the INR value became market linked, and it was freely it can move freely on a day-to-day basis according to the market movements, and because of that suddenly the INR became weak, and that's the reason why you have such a huge outperformance of the INR returns in gold. But then you can see that gradually has gone down, and from 2005 2006 onwards it's just the basic simple long-term 5% kind of exchange rate return that you've got. And so don't expect spectacular returns or spectacular gold movements in the past. Don't look at the past gold movements, or at least for the last 4 decades. Don't look at that and assume gold will always move up and therefore it will give you huge returns. One, you are you are forgetting the risk. It can have extended periods of downtime. And then second, you are forgetting the fact that gold, the INR is not going to be as much, the alpha from the INR USD is not going to be as much as it was in the past. Of course, there's always going to be some growth. I'm not saying the INR is going to is not going to stop increasing. That's not what I'm saying. But long term, as the country evolves and so on, the return that you get from the INR USD exchange rate is going to more or less stabilize. Already it's about 5.5-6% as I showed you in my Motilal Oswal S&P 500 video, and it should more or less stabilize at that point. You should be able to get a little bit more than an SB account. That's what you should be able to get down the line. So your gold returns will also kind of stabilize. What is more important is that because gold is so risky, in future, if there is a crash and if there is a sustained downturn, the gold price is underwater for a significant amount of time, then this exchange rate will not help you, because gold INR and gold USD have now become more correlated. Therefore, gold INR returns will also suffer. So you have to keep all this in mind and not just believe some selective data points and assume everything will be all right. Catch you later. Bye bye.